Welcome everyone to the Diary of an African Entrepreneur, where we explore the stories, the strategies, and the struggles of people, entrepreneurs building successful businesses in Africa. My name is Deji Adebusoye, and I'm the host of this podcast. Today, we are going to be sharing the story of VeendHQ. VeendHQ is a pioneering financial technology platform that provides embedded credit solutions for businesses and individuals across Africa. By leveraging data-driven insights and partnerships with banks and financial institutions, VeendHQ enables seamless access to short-term credit, powering consumer financing, business lending, and buy now, pay later solutions. The company's mission is to bridge Africa's credit gap by making lending smarter, faster, and more inclusive. Femi, welcome to this podcast. It's good to have you here today.
Thank you for having me. I'm so excited to have this conversation.
Well, we're going to get into the story of VeendHQ, but before we do that, I think it would be good to just meet you as a person. So, who is Femi, and why are you doing what you're doing today?
Back in the day, I used to be a software engineer. Started from companies like Innovate Nigeria, moved on to One Credit. One Credit became Carbon, built pay capture for Access Bank, and then was an early employee at Flutterwave. Built the original version of Flutterwave even before the name Flutterwave came along, right? 2020, I left Flutterwave to start a dev shop, and I was helping banks, right, automate their processes. Then I discovered a very painful problem that they face, which is the problem of collections. So it looks like it's very, very easy to lend in Africa, but the problem is collections, right? Banks were experiencing a high NPL rate, and I decided to find a solution to that. Now, the original idea was to look for a way to take repayment even before money gets to the bank account of the borrower. So we started Veend 2021 with that hypothesis that we're going to be able to do that. We found a partner that helped us make the deductions, and then we've started. Since then, we've disbursed more than $18 million to 314,000 consumers in Nigeria, and we are still going full speed.
Yeah, so you said you started from, was it Carbon was your first stint, right?
Innovate Nigeria.
Innovate.
Then
Okay.
Carbon is the second one.
And so when you joined Innovate, were you also working as a development engineer, or it was in another role?
I was a software manager, the engineering manager at One Credit at the time.
Okay, you studied electrical engineering at Olabisi Onabanjo University. Can you draw the line between what you studied and almost out of school, you were already, a software engineer?
Okay, so when I was in school, I studied electrical electronics engineering, and I think it's one of the hardest courses to take. Any engineering course is hard. It's more of mathematics and logical thinking. So that gave me the background of solving problems. So in fact, anybody that I meet today who is from an engineering background, I know that their problem solving ability, it's on another level, because there were some problems we had to solve, right, within the at school then. But while I was in school, so I joined Olabisi Onabanjo University via the pre-degree program, I think down in 2004, right? I had a roommate who was studying computer science. So whenever he goes to school or during a short break, so maybe there's no pre-degree course going on, I pick his book, DHTML. It's a very large book. I get on his laptop. I start learning HTML. So that's how my journey started as a software engineer. 200 level at Olabisi Onabanjo University, I realized when engineering is hard, I was looking for a plan B, right? So I started going for computer trainings during the weekend. I did CCNA, got my certification, did MCITP, right? Tried to learn cloud computing. So from 200 level to 500 level, all my weekend was booked, right? I was always out of school, tried to work on my plan B, just in case. So I graduated second class, right? Lower. So try to be proud if you have in second class lower, right? I I graduated with second class lower in Oladipisi Banjo, but I had something that could help me go further, right? The fact that all through my school year, I've met people who were working in banks, who was maybe head of IT at a large bank, and I was sitting in the same class with them since 200 level. So we discuss work. They tell me what's going on, how they are planning, how they are doing the course just to get promotion, right? So I knew that I was on the right track. Now, this helped me with my people skill because I will consider myself an introvert, right? Back then. So people won't believe that I'm still an introvert, but back then it really helped me connect with people higher up, right? Some of them are CIOs of large banks right now, right? So that was how my career started. And before I graduated, I was able to set up a couple of businesses. So my co-founder and I, right, was able to get a contract from the Broadcasting Corporation of Oyo State to help them build a website to Radio Jingle. That's during an IT program. I remember back in the day, I'll take my dad's um, Mercedes Benz driving around Ibadan, right, from one school to another, submitting proposals for a digital exam platform called the Tester, which I built back in the day during IT. So that is when my entrepreneur journey started, right? IT when I was at school during the Suez period. So I and Ebenezer were going around Ibadan, submitting proposal, right? I got my first contract. It was a funny story. I was in the IT department. That's where I was doing my IT, and one of my colleagues challenged me, like, "Oh, Femi, you know a lot of things. How come you don't use it to do anything? How come you don't earn money from it? Is there something like Femi? Your head is like a dustbin. You are just packing knowledge, but you're not using it, right?" So I wanted to prove him wrong. I got on my laptop, just threw up a proposal, and went upstairs to the chairman's office. Um, and may he rest in peace. His name is Mr. Prince Atilade Atoyebi, right? Went to his office and met the secretary. I told her I wanted to meet the chairman. I took a slip and waited my turn. I was so scared. I don't know what I was scared of, but I was extremely scared because I was an IT student. Now I'm in the chairman's office trying to submit a proposal. And it was my turn. I got in. I told him, yes, we can rebrand the website of BCOS at the time. We can refresh their jingles. Mind you, I didn't know how to do all this. So I could view the website. I could view the website with Flash, but for an enterprise, my skill level was not there at all. So he said, "Oh yeah, let's see a demo." Then I was shocked. I tried figuring out how I'm going to build it. I did one on my own using Dreamweaver. It was there, but I don't think it was that presentable. I called Ebenezer. Ebenezer connected me to Bosun. Bosun is a co-founder of Rice Vest right now. So back in the day, so I reached out to Bosun. Bosun did some some simple designs. Then it was now about pricing. At the end of the day, I got on my laptop, built something, so I had two versions to present. Right, the one I did, the one person did. Ebenezer worked on the radio jingles. We submitted it. We got the contract for the radio jingles. Right, so that was the first um the first project that really kickstarted my entrepreneur journey. Though even though it was an hassle to get the contract money out, right? I think we didn't get everything out. We got maybe like 40% or so, right? Of it, and then we just left it. Right. And but it was something that improved my confidence. And 500 level, when we're graduating on the last day of school, me and my friend were talking and saying, "Well, what are we going to do now? We are leaving school," right? And some said, "Oh, I'm going to start my business," right? And they actually started their business. So some of them are also Techstars founders now, right? I know two of them. They started the business. It was a good run for them. I saw all that. Then I said, oh, you know what? I want to work for 5 years just to gain some experience, right? So that was part of the reason why I left Flutterwave the time I did, right? I actually left 1 year late because I felt, oh, I promised myself 5 years. I'm going to start a business. Now it's 6 years. It's like time was ticking. So I had to leave, right? So I left with the confidence that if I was able to work with founders, right, and be involved up to their up to the point where their business grew to the point where I've been living, I should be able to do the same for myself. That was the thinking. So I took that risk. It was the biggest risk I've ever taken in my life because there was literally no plan. I just thought, I'm going to start. I remember leaving Flutterwave. I knew I couldn't work at a similar fintech for the next 1 year, right? And I had to come up with something. I started with a platform called Walkover. Walkover is a platform that helps recruiters hire technology talents, right? I launched that with I had a co-founder then, right? Then it's had a run for a while. Now then I started Veend. Next I realized Veend was going to be bigger, so I focused on Veend, right? So I started that way. But what's interesting is this. It didn't matter how I started, how Veend started was very funny, right? I think Walkover it had better preparations. It didn't matter how the business started, but the most important skill is facing a problem and finding a solution to it, both for your customer and for yourself as a founder. So for myself as a founder, I usually chew bigger than I can swallow, right? I usually face bigger problem or just like someone used to tell me, Femi, oh, you don't think this through, right? I usually start from that position, then think backwards. Like, oh no, I'm here. Why did I get into this thing in the first place? It's too hard, right? Then I start walking backwards to find the solution. But one skill that I have is my ability to make subtle changes very, very fast. I asked ChatGPT what it knows about me that I might not know. And what it said was that, oh, my ability to change, like nothing is ever set in stone for me, right? So my ability to change subtly, very, very fast, right, is one thing that I know of myself that allows me to at least still have that staying power, right? I see this is not working. I quickly tweak to something that works, then move on to the next problem, start tweaking. And that's what has gotten Veend so far, right? Because when we started Veend, we started with the idea that, oh, yes, we're going to build a SaaS model, right? My investor said, yes, nothing but SaaS. It's SaaS all the way. And we started SaaS and we realized that in Nigeria, right, the culture I want to say it's the culture at this point, because I've seen other founders face this issue. The culture, the enterprise culture, won't allow SaaS to scale the way it's scaled in the West, right? There's always this power play, right? Of, okay, I'm using this technology now. Now I'm profitable. What if I build my own instead, right? With all the money I'm making now, I should be able to afford to build something from scratch. It's not, oh, I should be able to acquire this startup that is making me successful. It's not, oh, we should actually sign a 10-year deal. It's not, I should fund this startup in their next round. It is, now I can build a Veend and move on. Or I can try to get the IP of Veend and move on. That's how it is, right? So I don't think we're there yet.
Femi, let me own in a bit on that, because it's an interesting thing you've mentioned. First of all, maybe for the sake of those who don't know what it is, you can just tell us a little bit about when you say SaaS, software as a solution, what does that embody? What is that? And then maybe you can go a little bit further to explain, you give an example now, but you've said that it's difficult to scale because once you're building something, you're using a solution, you would then think that, look, instead of continuing to pay for this solution, why don't I build that solution as well? So it creates a problem for the SaaS company. So can you elaborate a little bit on that just to get our heads around it?
Okay, SaaS is software as a service, right? That is where a company or a developer builds a product, and then people pay a monthly or annual subscription to use that product, right? So the first problem is your ability to price right? So how do you price correctly to ensure that you are not pricing too low, that at the end of the day, if when the companies using your product start scaling and starts winning with your products, you don't have to go to renegotiate contracts, right? Because that's usually where the problems start from, right? Now, for a finance product, from what I've seen so far, right, everybody wants to be a fintech, right? You have the banks, the existing enterprise business. They want to have something that they own by default, right? Now, at least that's my opinion. Now, when we started with a SaaS product, right? It was doing well with numbers. In fact, if I say we processed $18 million, right? The majority of that $18 million were processed during SaaS days, but revenue was something else, right? Revenue was around $8,000 annually, right?
Wow.
So it was solving a problem, right? But the results, let me say the ability for a customer to pay for the type of problem it was solving, right, was low, right? So we dated that, we tried renegotiating contracts, right? Still, it was not hitting the bar for us, right? It was, we either have to shut this product down, right, or pivot to something else, right? Now, so what we've been doing so far has been a lot of business model pivots or optimization, right? Now, from a situation where we were pure SaaS, where we charge a percentage, right? And as a fintech, if you are not in control of your own pipeline, of the customers, the amount of customers that are getting served on your platform, right? I mean, that means you are leaving your destiny in the hands of somebody else who might say, oh, today for the next 3 months, right, we're not going to serve customers. And then that's your revenue. Cool, right? And you also run a risk of a company who has ambitions of being a fintech, even raising money on their own, trying to own the IP, right? Looking at your own IP and creating a version of it, especially if you're in the early stage and your legal agreements are not tight enough, right? We had those issues when we started. It was almost like everybody was out for me, like, yeah, Femi, we are coming for you, right? It was personal. So we changed the business model to something where it still mimic the SaaS model, but this time we control the customer pipeline, right? We became customer facing, right? We'll get the customers, we'll send them your way, right? So it was no longer, you'll go and get your customer, use our platform, and then we just make decisions, and then the customers get served. Because if I say I had 100 lenders back in the day, right, maybe 3 of them are active, right? Maybe 3 of them has that risk appetite to serve customers the way I want them to be served, right? Which means I can't commit to say transaction volume will be this by next month. I can't commit to say my revenue will grow by this percentage by this quarter, right? It was impossible. So we switched that to the second business model, and it worked magic. The next quarter, we experienced a very, very large increase in revenue, right? Large. It was like magic. That was the first time Vind was able to pay salaries from revenue generated by Vind, right? So
before we get into the new model, so this might be a good segue actually to get into Vind. So tell us how Vein started. What was that model exactly? When Vein started, and then you can now transition and tell us what this new model that you are piloting, what it is.
All right. So when we started by charging um, an annual fee, right? Back then it was around a 5 million naira annually, right?
What problem were you solving? What problem were you trying to solve?
We're solving the problem of collections, right? So we created a platform that could make decisions in less than 1 minute, right? Using alternative data, salary data, and likes. And then we're able to also deduct from SaaS, right? So we've integrated with a payroll platform that allows us to do that. So we're solving the problem of collections for borrowers, for lenders.
Right? Lenders.
Yes.
Okay, so a lender now, if I'm a lender in your previous model, I know it's going to be, and this is consumer lending, right? This is not SME lending, or it's consumer lending. So I know I have a problem. People are not paying. I know in those days where the likes of what are those guys always chasing people with phone calls and all that to collect their money, sending all those ridiculous messages and emails. So they have that problem, right? And you are saying that we can help you improve your collection. And the way you did that was you embedded yourself in between their own platform and the consumer, and you integrated yourself into like their salaries. Maybe just to provide clarity on how you provided that solution for the problem.
Yes. So we provided a solution by, first of all, we integrated with a payroll platform. We partnered with some government agencies, right, which allow us to serve government workers. So we can deduct government salary from source, from the accountant general's office, right? We can also deduct from a second stream, right, via a payroll platform that process for multiple organizations, right, and some other government organizations. So that's how we started. Simple technology, right? Then we integrated USSD. We add a web platform, right? Well, at the end of the day, customers really, really love the USSD platform, right? And we were able to create unique USSD code for each lender that comes to our platform to lend, right? So that is what we did in the initial phase, and that's how we solved the problem of collection. So majority of some lenders just focus on the model, right, that we have on Vind. It is a simple model, just one model, where lenders are able to lend to people who have verifiable income, right, either via their employer using a certain payroll platform or via our ability to make deductions from a government payroll department, right, a relationship from there. So that's how it functioned.
Okay, so from every collection, you were earning your income from every collection you made.
Yes. Initially, we were not.
Oh, I see.
We were not. Initially, we were earning an annual fee, right? Then we moved into earning a percentage. So it started at 1%, right? We switched to 2%, we switched to 3%, and then we start realizing, okay, if our fee is high as this, right? How does it affect the end customer, right? How is the lender able to price, right? So the majority of our fee back then was around 2% of each transaction. So you see it as a management fee on the loan disbursed, right, on the lender's end. So that's how we earn.
Okay, but I would have assumed that, given that model, you said revenue was low. I would have assumed that in that context, if they are disbursed like 27 million, and maybe my math is wrong there, if you are disbursed like 27 million and you were earning 2% of that, does that not translate to what? 18 million. Does that not translate to what would have been your own income?
Yeah, that's when your largest lender is paying 5 million per annum, right?
Because you had a lender in the annual fee.
Yep. So the first lender we had was, the best lender that we could ever dream of, right? But the agreement was to pay around 5 million annually. The volume was great, so great, but our ability to renegotiate that transaction away from an enterprise fee of 5 million naira per annum to per transaction. No, it didn't work. In fact, it became a very, very big issue at some point, right? So, but for other lenders, we were able to charge the 2%, 3%, but these are small lenders, right?
Mm-hmm.
Small lenders who, after they experience huge traction on Vind, in 1 week their capital has been exhausted, right? It has finished. They can't disburse more loans, right? Some of them disburse a loan for a full month, wait for repayments, right, and then come back. You understand? So
Mm-hmm.
that's one of the issues. So we have at some point, I made up my mind and said, oh, majority of lenders in Nigeria are also SMEs, right? So they have this capital problem already. So if they have the capital problem, that capital problem will also come down to me, who provides a platform. So they won't have the ability to pay the kind of revenue that I'm looking for. Right. So there are very, very few enterprise customers who have figured out raising capital. They are the asset managers of this world. They are the commercial banks of this world. Even microfinance banks face the capital problem, right? The capital problem is still, it's another topic on its own, right?
Yeah.
So that is what made us pivot, right?
See.
From the enterprise model and then the SaaS model, because the ability to pay of the customer, right, was an issue, right? And when you are still small, your ability to renegotiate contracts, especially with enterprise, it's another thing. That's where I say some of them will just feel like, yes, we can build our own products, right? We're making so much money. I mean, we're making so much money from this. We can hire a team in-house now, and we can move. We validated this idea. And whenever you want to sell, you have to tell the lenders exactly how everything works, right? How the decision engine works, how they can source for customers, right? So which is literally exposing your IP, right? So that's why I said,
I see.
for a SaaS model of fintech, right? I, I don't think we are there yet. I don't think, both from the cultural perspective and then the ability to pay, yeah, we're not.
Yes, I see now. So for anybody who is thinking about this, the first thing is, even if you have to do anything like this, a percentage of transaction is a better model than a fixed fee model. But the problem even with that is, as long as you are an in between technology, the person you are providing the technology to is looking for how to backwards integrate and create something like that of their own, and it's just a question of time before they cut you off from that source of income. So that led to Vein's pivot. So now let's move to that pivot. What did you pivot into?
While we're doing all this, the initial model, we've built a lot of relationship, right? At some point, we've approached some state governments just to have an agreement so we can deduct from them, right? So which means we had the ability, right, to become a bank if we wanted to, right? But how do we run a bank without doing on-balance sheet lending, right? Because of course we knew we didn't have the balance sheets, right, to lend. We can't serve those customers, right? So now the hard moments came when we realized that, oh, actually, somebody is disbursing up to $1 million monthly on our platform, right? Which means up to $1 million of capital. It's our platform every single month. But we are not able to earn from that. What if we convert to a model where that capital still comes, they serve the customer, right? And then we earn more from that, right? This is more than the 2%, more than the 3% that we were looking at. Now, we then went back to what problem are we solving for each of these customers. So the interesting thing is this: the problem we're solving is not the problem of automation. It's not the problem of technology. And with our experience over the year right now, I think technology automation is still just an enabler, right? In fact, if I turn off all our technology and start doing a manual process, there's still one problem that I'm solving for our customers. It's the problem of risk. So we priced that risk, right? Now we engaged all our lending partners and told them the current model we are on, we're stopping that model, right? It's resulted in some very, very, very hot conversations, right? Because of course, some people have planned entire year, right, on that model. Now, but we are doing something else. We are going to the same dashboard you use, the same set of tools you use, but now you don't have to think about spending marketing naira on acquiring customers, right? You don't have to think about risk, right? Because of course, if I say we've built a decision engine, right, that is meant to solve the credit problem of Africa, right? Why should risks come up in any conversation that I'm getting into? If it comes up, it means we've not done our work, right? So if this platform really works, right, as we pitch it to our customers, you know what, let's just take off the risks out of the conversation. So we told them, if any default happens on this platform going forward, we are going to pay you for it. Wow. 100%. Right? 100%, Vind is going to pay for those loans going forward if you move to this new model. So we call the new model Vind Prime, where banks and state licensed lenders lend, right, to customers, and then we agree on a risk adjusted return. That model changed our lives, literally. I remember having this strategy session with our team, and people were saying, "Oh, that now we're taking risk." We're taking risk, right? It was super scary, but it was either that or we just say, yes, this business doesn't work and we move on, right? So we switched to that model where we priced the risk, and then we started thinking about, on the finance side, thinking about, okay, how do we create a reserve, right, for this risk that we're taking, so that if there's a default, we take from there. So many things changed. The team needed to start learning how to engage with customers directly, how to sell, right? It's new learning curve for everybody, but it worked well. In fact, if Naira has not done what it has done in the past year, when we convert our revenue to dollars now, it will be something amazing, right? It will be extremely amazing, right? Because the J curve was awesome. So that's changed our life, right? So we moved from a model where we charge a flat enterprise fee and a transactional model into a risk-adjusted return model. Lend on this platform, just bring your money here and you serve customers at this rate, right? We'll charge a customer, right, a fee or add a markup, right, to the interest. But don't worry, if there's a default, we're going to pay you. In fact, we set up a trust, right, to ensure that if there's a default, customers get paid, right, from the trust, right? So that's what we've done.
Interesting, Femi. Really interesting pivot. And what you described in terms of the risk you took on reminds me of a story I had. I don't know, many people might not know the man called Monish Prabrai. Is a billionaire investor in the US. And one of the things he said was a model he took on in terms of investing stocks is, instead of the traditional 2% management fee and that it takes on initially, because he trusted his ability to make money, he told his customers, don't worry, don't pay me any upfront management fee. Whatever I earn for you, I will take my fee from that. And because he was so certain, like you are so certain about your technology, he went that route and his business just went up. So it's really impressive. But, whenever I hear the question of risk, because more or less what you're doing is like you're a fund manager, more or less, for lack of a better word, people flow capital through you now to consumers your balance sheet is not carrying on that capital. How do you mitigate that risk? Is it just because of the strength of the technology, or do you have other means by which you mitigate that risk?
Yeah. So what we do is I think when we started as a pilot, and this is how we always start. We're about to launch another product now that will follow the same what do you call it? The same model, right? So we usually start with our capital, right? With our own capital. So then what's left with our funding, right? We push it into the portfolio, right? And then use that to learn. Now, learning for us means what's the percentage? How many percent of this money will come back? Right? So are we going to get NPL rates of 10%, 5%, 3%? Right? Back then, I knew I had an Excel sheet that modeled our transactions for the next 5 years. Right? Now, before going into this model, I modeled it for the next 5 years, added the risk component, the NPL. What happens if we continue to lose money? At what point does it become a business killer? Right? So we know if NPL hits this rate, we stop. Right? It's an hard stop for us. Right? So we started from there. And then we modeled it into our decision engine so that depending on the quality of the customer. So for the first 6 months, I remember sending an update to my investors telling them, oh, we are pivoting to a new model. We are testing it by July, was that 2022? By July 2022, if our revenue gets to this stage, right, it means this is going to be the new model. I had a call with a couple of them, right? Now, for that 6 months, we use that to know the risks, because we have to know the risks we are taking before pricing it, right? We saw that the NPL rates, so we had, I think, 2 cohorts for MTN, was within a certain range. So we invited some of our lenders for an early access program, right? Just so we can draw in some people, and then we priced the risks into it, right? So that way, we know the risks we are taking. And we've started seeing how we are going to mitigate it. So we started having, I think that was the first time we started having quarterly strategy sessions. So we can get all our data, see who is defaulting, what age range, which state governments, right? We started seeing it. For some, we turn them off. For some, we just add a new risk weight to them so that when those customers come, right, they get a higher interest rate, right? So that's what we did. So at the end of the day, we were able to price even the customer based on risk, which we have a decision engine that can rate customers and say this customer is high risk, and also pick the products to assign to that customer, right? So if we see a customer that has been defaulting on our platform and other platform for a while, right, the interest rate to that customer might be higher than somebody who pays all the time, right? So there's a lower bound, there's a higher bound. So that's how we manage risks. Now, we also add a reserve where if there's a default, we need to pull from that reserve to pay the lenders, right? So it was discipline, being able to follow our projections, our financial projections, right? Saying, are we still within the range, right? Having that reserve, and then reviewing quarterly, right? So we review daily, the value, but we have a very large review in the quarter, because at this point, we are now able to control our revenue, right? If a certain state government is having issues and unable to pay, maybe we need to increase the principal to another state so that we can cover out from that, for that, and generate more revenue and cash flow for the next 9 months. I call it financial engineering at this point. We could engineer every single part of the business, right, to cover up for risks, to have a guarantee that our revenue continues to grow, or at a minimum does not drop, right? So that was it for us.
Do you feel that part of the things that have helped you build this kind of intelligence is data, or is there something else that is helping you build that level of intelligence in the system?
I would say it's trying so many things fast.
Experimentation.
Experimentation. So if you look at my LinkedIn, you see we tried launching a platform called VeendHQ at some point.
Yeah.
So we've tried so many. We've tried pivoting into banking as a service. We've done VBlack. We've done a lot of things, but we did a lot of things. But our ability, we even issued cards. The last set of our cards will expire in October. So our ability to get the results and quickly either implement, right, scale it. No, I won't say scale, go further, or drop it, right, has really helped us. So we try things, right, throw it out to our customers, see the revenue from it. So some things worked. For example, banking as service worked. We had customers, right, that really, really wanted that product. We had the technology. We still have it today. I call Vind a fintech OS, a finance OS today. We can do everything if we want to, right? Now, but what make us stay on a certain path? Number one is revenue, right? Because we were coming from a career where we're revenue staffed, right? We don't want to get back to that point. My goal right now at this point is to find a way to reduce the risks we are taking on and also increase our cash flow. So revenue is number one. If the revenue does not look like it's going to grow, right? So that is figuring out how much is the customer willing to pay for this particular product. How much is the cost of running that product, right? Now, if we get more customers, how fast is that revenue growing? If it doesn't make sense, we drop it. So that's why we have a lot of things that we've built that's just on our platform today. Good thing we're able to use it to support our existing products, our existing business, right? But we are not pushing it out anymore as something we offer. We chose our battle, right? That's the reason why. Now, and as we serve customers ourselves, we now get data, right, that we can then use to make more decisions, right? Data like, okay, where's the market going right now, right? Do we need to stay on this market? Do we need to find a backup, right, or another product, right? So that's what that tells us.
Brilliant. You said something about pricing, and I heard a podcast once, although it's not a Nigerian podcast, and the entrepreneur was, or this founder is a multi-million-dollar company that he has built. He said that if you price your customers and more than 20% of your funnel are your customers, say you're not pricing right, that you probably are leaving money on the table. What's your own philosophy about pricing?
Yeah, that's true. Right. That's true. I think us as founders sometimes are scared to price. That's one of the problems that I have when I started. I was so scared to increase my fees, and I felt like if I increase this fee, I'm going to lose these customers. And those customers were each customer. I had to, and I lost those customers at the end of the day. Right. So now for pricing, right? When you launch, for me, when I launch a new product, that's the new me. Right, from what I've learned, I think I've changed over the years. The new me, if I launch a product today, right, I'll probably have a pricing component to it. I'll let the customer accept the terms for the pricing, but I might not charge, right?
Okay.
Because the initial products, I see it like I'm causing a pain to the customer. This customer will help me, right? It will experience my product. We find all the initial bugs, all the wrong processes, everything that is wrong with that product. That customer will experience it. So I feel like I want to pay that customer back for giving me that feedback. But FYI, this from a position of, well, we are making revenue already, right?
Correct.
And maybe for a startup that is funded, right, that's a wrong way. Yes, you can afford to do that, right? That's where I'm talking from. I think that's what has changed so far, right? So first, I like to start from, you know what, the pricing is this, accept our terms and condition. That's helped me validate that customer is willing to pay. Now I can just say, oh yeah, you're in an early access program, right? We are waiving this price for the next X months. It always has a deadline, right?
So when they are signing the terms with you, they are not aware that they will get like
Yeah, how else? Oh, they are not
get the first few months free. Oh, brilliant.
they're not aware of that, right? They're not aware. So that these customers are willing to pay, right? The market is willing to pay for this. So the market has to price the product first.
Correct.
Right. So if they are willing to pay, right, that so you have something. But if they're not willing to pay, you then start tweaking the pricing. Right? If so many people, a lot of people are willing to pay for that, right? You then start tweaking the prices to moving it up to see where people start dropping off, right? You start measuring that. So that's how I deal with pricing. And then after the period where I've gotten so much feedback, right, we've fixed all the bugs, like like Vida now, my team has been having sleepless nights for the last since January on that product because we launched before we add the products. We literally deployed a website where people accepted terms and conditions. There was no product behind it. There was nothing, right? So they had to start building, right? And we promised customers, yes, we have it, yeah, right? So when the product launched and the first set of customers got into it, then it was another set of requirements, right? They had to start grinding, solving all that problem, right? So I like starting from that point because it now allows me to get good market feedback, right? And so not for sometimes a single pricing might not work for everybody. We have to start thinking of if the customer is a merchant, okay, maybe they have the ability to push the pricing to the customer, right? Or maybe they have the ability to buy some tokens and then they use it up. You understand? So we ask to test all that. But the goal is this. One, figure out a way to know how the market price your products, right? What's the market price? Let me call it fair market price, right? Then how far can you push that fair market price? Because that then goes into the conversation of matching, right? So in all my projections, you see something contribution margin, right? Okay, if we do 20%, if we do 30%, if we go 80%, what happens, right? In contribution margin, the higher the margin, the better it is. How far can you push that contribution margin? And the contribution margin can't be something that is fixed. Sometimes the market might be good, everything might be going good in markets where you raise your contribution margin to the max, right? And the market might be in a downturn where you want to reduce it just so that you continue to have traction. But when you reduce it, maybe you want to then you want to require more commitment from a customer. Maybe those customers have to buy. If it's a subscription product, maybe they now need to pay annually or something to reduce that margin. So things like that. So that's how I handle pricing. But when you price, and let's say, I think the one I learned from Y Combinator's startup school was if 20% of your customers start dropping, right, you are at a good point where you can leave the pricing and you are not underpricing. You understand? But it allows you have a range, right, of what your pricing should be.
So Femi, at what point do you know it's not a cost, it's a pricing problem or a customer problem? And what I mean by that is your pricing, but the question is, are you addressing the right set of customers, and should you be moving to another set of customers? You see what I mean? So maybe you price at a particular point, people are jumping on that price. Is that a question of the customer segment, or at that point you just realize, look, yes, it's still this customer segment I want to serve, but I think I can improve price? At what point do you make that, a distinction?
Okay, so for me, I'm always open, right? When it comes to customer, I'm open to everybody, but you always have to choose your battle, right? I go through a process called motivation, ability, then trigger, right? What's the motivation for this customer? What's your ability, right, to deliver the said product to this customer? And then what's the trigger? At what point? What happens that makes this customer use these products, right? Now, if you know the motivation, if you know the trigger, and you can target that trigger and use it in your marketing material, in everything you do, you're going to get this customer. Yes, go for that customer. Now, the last part is your ability to deliver a really, really awesome product, right? Now, one other thing that I've realized based on my experience now is this. That ability component um, is very tricky. Let me use an example of you are a let me not don't let me use a lender. Let me say you are a lending platform, a SaaS lending platform. Now, to collect repayments on behalf of your lender, you rely on a payment gateway, right? So the reason why the lenders, your customers are using you is because they know, oh, on this platform, if I lend on this platform, they're going to be able to serve their customers and they are going to be able to collect. That's what they expect from you. That's the ability. But the payment partner you have can disable your account for compliance reason simply because one of your lender, right, has an issue in making payment. They can do whatever they want. You don't have the ability to serve those customers, right? You don't have the ability to serve those customers. So that's the way I think of ability now, where there are some things that you know that you needs to be top priority for you going forward. Yes, you might still go ahead to serve those customers, but you need to know that you have to solve that problem because there's a third party risk there that might shut down your entire business if it happens, right? That lenders might not be able to disburse, they might not be able to collect, right? So once I see a customer where I have the ability to serve 100%, I usually go for those set of. There might be a very tiny segment, right? But those are the people that I'm going to spend all my marketing funds on, right? The ones that I can't serve 100%, if they come organically, yes, we will, while we try solving the ability problem, right? And then they then go into the pipeline. But you should also know how to price. You should have figured out your pricing for all these customer segments because at the initial stage, when you launch a new product, you will find so many customers coming at you, right? Especially if it looks like something that everybody needs, that's solving a real problem, right? But as a founder, you need to come back, sit back a little bit. Do I actually have the ability to solve this problem? So you can be conscious. So you don't feel like, oh, this is success, right? You know that this is your next iteration, right? You are serving them now, but this is where you are going. And for the ones that you can serve 100%, you know this is what you are preaching. We can do this. We are able to do this. You are able to find those customers using their motivation, their triggers. You're able to send out those messages and focus on those customers. If those other customers come, yes. And when you have the ability, you increase your marketing budget, you start targeting those customers too. That's the way I see. That's where I select the segments. We are doing something similar with Vida right now. So with Vida, we're able to serve everybody, government agencies. We're able to serve landlords who wants to do background checks for their customers. We're able to do buy now, pay later. We're able to allow lenders lend on the platform, making instant decisions with AI powered insights, right? A lot. But if you see what we are doing online now, we are focusing on BNPL, right? Because 100% we are able to deliver on that particular pipeline 100% without anybody's help, right? Without relying so much, right? It's either we've had a very, very tight agreement with somebody who where we know that the risks of anything going off, right, is very low. The next thing we are going into right now is recovery for lenders, right? I think we just completed fixing our ability to deliver on that product last week, right? So that's another cash flow for us that's coming up. But it's very targeted. We're targeting merchants for BNPL, right? Working with banks to come and serve the BNPL transactions. On the recovery side, working with banks to help them recover their bad loans, right? We have that too. But the cooperative societies, the landlords, and others, I think we still have some things to do. So not that we can't serve them now, but we just have to we need to dot our I's so that we don't end up promising something we can't deliver, especially when a partner, right, um, decides not to go the same line we are going.
No, this is brilliant, Femi. I think honestly, it's been very educative and insightful for me. This probably is also done on the back of an amazing team. So, can you tell me a bit about how do you select your team? What's your secret sauce?
Okay, this is recent, so I have a very very great team, right? I've always have an amazing team, right? Now, your ability to select a team as a founder comes from your own self as a founder, your ability to be accountable, right? It always starts from you, right? If you're accountable to yourself, you'll be able to hold other people accountable. Now, this is the way I want every founder to see team members, anybody that you are hiring, right? Or that works with you, either as a at any level, right? So far, you hire somebody for a certain reason, you have to hold them accountable for that purpose, right? Uh, so we started something. So after our Texas program, we started using a framework called the RACI framework, right? It's a project management framework, and across board, we had to train everybody on that framework, right? RACI framework just it means responsible, accountable, consult, and inform, right? So there's somebody who is always responsible for delivering on it, for delivering a task. That person has to have the ability to deliver that task. There's somebody accountable, maybe the team lead or the director in charge of that. There's somebody you need to consult. So maybe the COO, maybe a third party, somebody who maybe owns that idea. And there's somebody who needs to be involved, maybe the CEO, right? Maybe the investors, maybe someone else, right? So everybody got trained. Now we set OKRs. And the way we set OKRs is a funny thing, right? We usually we have four metrics that we track at Find. We have the loan counts, average principal, contribution margin, and then um, default rates, right? The team leads on one or two of those metrics. Now, if we say we want to make a revenue of, let's say, $1 million at the end of a quarter, it has to come from those four metrics. What are we doing differently? Are we increasing loan counts? Are we increasing our average principal? Are we reducing our NPL rates? Are we increasing our contribution margin? Now, whenever I hire people today, right, I'm always upfront, honest. This is what we do at Find. This is what will be expected of you. We want to reach this revenue target by this day, right? Are you able to achieve that goal, right? We also test your ability to do work, right? We send you a case study. You have to solve the case study. You have to do a YouTube video, right? That shows you solving that case study, right? So that's way we know you are willing to do work. We see how you sell your solutions, right? In case Femi says no to your idea, you don't say, oh, Femi is always saying no. I mean, you push, you try to sell your idea, you continue like this is it. Like, I mean, you died there. This is what I believe. And then we try it. So we want somebody that is hungry, somebody that has that energy, right? To give in whatever they do, right? So that's how we hire. But before you join, we then set your first OKR. So when you are joining our team, this is what we're expecting. You said you've been doing a revenue of 1 billion every month. You know what? Give us 200 million. We don't mind, right? In your first 3 months, right? Help us hit so number of customers. Help us hit this average principal, right? and then document your SOPs and stuff. Right. Which means for the first 3 months, we are expecting something from you already. The time is ticking, right? The time is ticking, and we have a code of conduct and also a performance review policy, right? That says when you join Vind, in the next 2 weeks, you have your first performance review. So we're tracking everything you committed to. You have to sign those commitments as part of your employment letter. Everything you committed to, have you achieved them? Are you on track? If you're not on track, it means we're going to try to help you, right? We are going to continue to get updates. We are going to try to show you how you can achieve it the easy way. Then we set a meeting for the next 2 weeks. And then at the third meeting, if you are still not performing, we'll let you know what that means. If you want to stay or if it's time for you to leave, right? So you make that decision. But the next meeting we are having, you have to have met all those OKRs, or you are going to have to leave. And there are some cases where maybe the market changed and some of those OKR you might not be able to meet them, right? But that's where you yourself have to be able to negotiate. You have to be able to call the owner of that OKR up to say, Oga, this OKR, I can't achieve it, so this is the reason why. Right? Try to negotiate. I want this instead. I can do this instead. Right? Which also helps us with ensuring that every single person in the team has some level of relationship, right? You can call somebody, oh, I can't meet this target because of this, or because this partner is down, right? But what if we focus on this instead? You understand? Not like, oh yes, I can't do it. Oh, this a evil target, I can't achieve it. No, right? No. So at the end of the day, your first 3 months, you are achieving something, right? And for me, the way I see it, I want to see somebody and say, oh, this is my money guy, right? You see me when I'm talking to, when I'm introducing myself, so, oh, this is my money guy, this is my compliance guy, this is my customer guy. If it's anything about customer, this is my negotiation person, right? There are some times if I want to negotiate, I just stay out. This person will do it, because from that first 3 months, I know this is the person's skill, right? And if at the end of 3 months, you can't show us that this is what makes you awesome, right? No, that doesn't work. So this is how I select my team members. So before I used to make it all vibes. If I like this person on the interview, this person goes through the interview. Yeah. But nowadays, we send out the job post. When you apply, the next thing you get is the SOP, is the case study. That case study is your interview. I look at you, I see how you solve your problem. If I like it, you get into the interview. That interview is more like, are you coming in or not? Right? And then the next thing, you get your offer letter. Very short process. But the main thing is that first 3 months, right? If you are able to own something, right? Yeah. And we've gotten to a stage where when we hire somebody who is not a good fit, you will see it in the eyes of everybody in the team, like, this person is not fit, because everybody is always
There's a culture.
hyper, always. Their culture is energetic, right? Fast moving. If you missed a day in Vind, by the time you come back, you might be outdated. You might be totally outdated. You might be totally outdated because some people might have made some decisions, right? And where you were before, you're just like, but we said we were going to do this, and people will look at you like, since when? You understand, right? Since when? That's how people work in Vind. It's very, 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 very fast. We were talking about BMPL on was it the day before yesterday, and the next day realized that on the next meeting I realized that, oh, my team has tried to optimize for average principal, and then now targeting SME. We start our first SME customers, right? And then the repayment has been good so far daily. And so even myself, I was outdated at that point. noisy because everybody was focusing on the metrics, right?
Yes.
Low count, average principal. It's not what Femi said. It is metric because at the beginning of the quarter, so the first OKR we give it to you, but the next OKR you are committing. You are saying next quarter I'm going to achieve this. My finance person is saying, oh I'm going to achieve 20%, 30% revenue growth, right? Customer success is saying I'm going to achieve this in retention. I'm going to mobilize this capital. Right? You are the one committing. So how you want to achieve it is totally left to you, right? And I think that's one of the mistakes I made as a founder when I started, right? I thought I could do everything, right? I thought I could do everything and I had to be involved in every single thing I was done, right? That's really slowed us down. Now, everybody just commits. Everybody gets on the streets, right, to execute, right? If there's something out of the ordinary that needs to be done, I need to know about it and approve, right? And then we move on. If they're having any problem, right, and they feel like I cannot block them, they get to me. We try to unblock. We move on, right? So that's how it works.
Brilliant.
And the most important thing, giving your team the freedom to do their work, right? I mean, you hire this person, let this person do their work, right? I know as a founder, you might not be comfortable with the approach, but you are not always right. You don't know everything, right? You don't know everything. Let them execute, right? If it comes back wrong, now you have more metrics like, oh yes, you write it to your, we are never going to do this again book. We are never going to do this again, right? And we move on.
Brilliant. No, I really like this. Is the first time I'm hearing that kind of perspective in terms of I like that close initial 3 months, every 2 weeks you are checking in, right? Because he also
Yeah.
that culture is where that's where that culture starts off. Because in 2 weeks you are trying to meet those. So by the time you get through even those 3 months, you already have that. I have to keep going and delivering on those, on those metrics. This is the first time I've ever had anybody put it that way. And I like the idea of the YouTube, do it on the video. Let's see how you problem solve in terms of being able to solve. Definitely taking on some of those lessons for myself as well. So thanks for that gem that you shared. We're going to begin to tie things together. You've said a lot already. What you've given us today is you can't get these things in business school, right? So it's from practically frontline, and I think it's been very helpful. Have you ever had to make any big personal sacrifice while building Vind?
I mean, I make sacrifice every day, right? I think every day sometimes it's worse. Sometimes it's subtle. You just where, why am I still doing this? Or sometimes you see somebody who remained in employment and is doing so well that you feel like I should have stayed, right? So a lot. So leaving paid employment into entrepreneurship is a big sacrifice. You need to know because you are going into an unknown realm. You might be so confident that it might work, but usually by default, the business you want to build wants to die every single time. That's the default, right? The default is startups just want to look for funny ways or excuse to die, right? So which means you have to sacrifice. I remember at some point where I just woke up in the morning and felt like my family, I really know them anymore, right? It's been a long time that I had a playtime with my son, right? And it's just been work, 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 work. I remember those days where 6 a.m., the first call I get is an angry customer. Oh, Femi, think this down, this. And I become anxious from morning up to the close of the day. I know some of my employees that went through that too, right? Where first call is an angry customer, right? And this customer is not paying you much, oh. You are not earning much from this, but it's early in the morning down to, and it might go on. It might be like GT Bank is down. It's end of the month, right? They used to have that issue, and it's down, and people can't disburse, and the phone is just buzzing, right? So it's a lot of sacrifice. But the way I see it now is I think I learned this during the Techstars program where as a founder, you have to always remember that you are not the business. the business is separate from you. Whether it's doing well or not, you are a separate entity for business. It's not a measure of whether you are smart or intelligent, or you are a failure or a success. No, right? Because it's very easy to assume that, oh, the business is not doing good, so, oh, Femi, you've been faking it all along, right? Or it doesn't work. Like, yeah. So it's you have to ensure that you have that mindset. It's one mindset that you have to be able to build, right? But the business is separate. You as a founder, you are a different entity, totally. So whether the business is doing well or not, right, is different from your ability to make this happen, right? So so that's the sacrifice is, first of all, letting go of all the opportunities, right? Because if you look at your skill level as a founder, you realize, so when you leave your job and then you start running the startup, you realize what you can do, right? Because it's no longer, oh, you are it's no longer you are what do you call it? You are a compliance officer and you are just doing compliance. No, you are doing everything. And you realize that even when you have a compliance officer, you still see some blind spots there. Okay, you're not checking this. What about this? Right? Then you switch your acts and then become a legal person. Oh, this agreement does not have this clause. Then you go down to the engineering team and say, are you checking this? Oh, what about this? Have you spoken to AWS? Have you done this? You are solving problems all through, right? You won't know that you are gaining knowledge, right? But that knowledge just makes you so very, very, very different from a lot of people. But you are not getting the return for it. Nobody is saying, oh, hey, founder, well done. Good job. This is your performance bonus, right? This is your employee of the year, right? You don't get that, right? You don't get that appreciation that everybody is suddenly asking for these days, right? Oh yeah, you don't appreciate me, right? You don't get all that, right? You do that for zero text. You just hope that your paper money, right, will become real money one day, which is up to you and your team, right? So that's the way I see it. But a lot of founders, I think I can say it now, a lot of founders that struggle with loneliness, anxiety, just always know you are a separate entity from your business. You are not the business, right? So it's always, and at this point, I think the way I also see it is this. I also try to say, what's my business? How strong is my business? That's why I'm always about ability right now. Because ability also ties into the ability of the people that you've hired, right? What can they deliver? Yeah. So you know what you can throw at them, right? You know what the team can achieve, because you might be at this level, but your team can't manage it. I've been in so many cases where we execute a strategy, everything moves up really, really high revenue, and then it falls back down just because we couldn't sustain it. The resources, the people we have cannot sustain it. And we either have to invest in training, in a lot of other things to ensure that we get there. For example, the team might not be able to move as fast as you, right? One of the feedback I got from ChatGPT is that, oh, the way I move sometimes, my team might not be able to gain competence in a certain process before we switch. So I've learned to just have my own idea in my head or be executing it subtly on the side while the team gain competence on a certain process, right? Because they have to learn. Always know they might not be at the same level as you. They have to meet you, right, where you are. So it's not a bad thing sitting on. So let's say you've just raised and you realize that, oh, the team you have can't sustain, or the business is not where you thought it is. It's not bad. It's not a bad idea sitting on money. You can sit on it. You can sit on it and make sure everything is ready. You can sit on your strategy just because you don't have the resources yet. You can't wait. Don't be too anxious. Don't don't blow off money anyhow, right? Be conscious. Know where your business is, right? So you as a founder might be at another stage, another level, right? But the business might be on a separate level as you, which is the components, which is the resources you have, the people you've hired, what they can deliver, right? Uh, so maybe you now want to start hiring new people. Maybe you want to educate them. Maybe the market is not right, and you just want to hold and sit. I had a conversation with one of our investors at one point. It was January, I think first week of January that year, and she called me and said, "Femi, this year you need to sit on the money. Just sit on it. Like, people will be able to raise this year. It's going to be tough. Just sit on money this year." And I was like, why will I sit on money? I didn't understand that. Why will I sit on money? Why will I just remain stagnant? Right? But I fully understand it now. Right? We usually make the mistake that, oh yes, we have all this knowledge, we have this idea, we need to push, 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 push. The market needs to be right. The resources at your disposal needs to be right, so you can pull that trigger and expect success. If they are not right, okay, just chill. Just chill. Make it right. Right? Make it, because it's also your responsibility to ensure that everything is right. Right? So that's the way I see it. So as an entrepreneur, you are always missing out. You're missing out on rest. For example, we started this call 7 a.m., 8 a.m. my time, right? It's early in the morning. I had to get up early on a Saturday, get on this call, right? Sometimes you have to meet somebody in another time zone and to be in the middle of the night, right? If you were an employee, you will complain to your employer, "Oh, yes, I don't work in midnight. It's 9 to 5. Well, that's, so you have to make those sacrifices. You have to have the mindset that you are going to continue to make that sacrifice. Everybody around you has to know that you're going to make that sacrifice, which means you might not attend all the whole best, right? You you might not be available, and they have to understand. And you also have to be you have to ensure that when you are available, right, you are there, right? And you might not have a lot of friends, but try to be your your own friend. Learn new skills on the side. For example, for my own, I think I make wine sometimes just to get myself into default mode where all I'm thinking about is, oh, making wine and getting this wine to clear, right? Um, I make music. I have a small music studio in my house, right? So just so that I have some time where uh I get to do other things, right? So yeah.
Brilliant. Femi, this has been super, super insightful. Thank you so much for sharing such lovely insight. And I think you shared some revelations or truths that most people will not be comfortable sharing, on a podcast like this. And I think it's going to be really helpful for many people who will get to see this podcast. So thank you very much. This brings the podcast to a close. So I don't know whether you have one last word that you want to share before we tie things up.
Okay. Thank you very much for having me on this podcast. Right. I'm always happy to share my experience, and of course, all my opinions might change. It might change tomorrow. I can fast.
Absolutely.
Right. They're not opinions of VeendHQ. They are my personal opinions. So, but thank you very much. I'm always happy to join these conversations. Thanks.
Thank you very much. So thank you everyone for watching this episode of Diary of an African Entrepreneur. I hope you found the insights very helpful. If you do, please share with your friends and loved ones, subscribe to the channel, and also like and comment, and we'll be able to bring more interesting insights like this to your feed next time. Thank you very much.